Welcome to RANsquawk's morning briefing for Tuesday, 10th of November 2009. Just a bit of a recap of some of the overnight news, what we've seen so far today. One of the main things to come out in the early hours UK time, around 5 AM this morning, was news that Fitch said that UK rating is most at risk among AAA rated nations, reiterating UK's outlook is stable and expects fiscal consolidation. Fitch also said that Germany has the least risk of losing its AAA status, and US rating will be pressured if fiscal position is not stabilised in the next couple of years. In particular though, the UK markets in the currency reacting, the pound got hit quite significantly overnight by a steep fall of around 100 pips in cable in around an hour's period from 5 to 6 AM. Again, after Fitch said that UK rating is most at risk among the AAA rated nations. In response to that, already we've seen today UK Trade Minister saying that the AAA sovereign rating is absolutely safe and the government is taking action on deficit reduction. And similar to that, the Prime Minister Gordon Brown has been speaking live earlier this morning, and he said the UK has assured people with deficit reduction plan the UK is taking necessary action to cut their debt levels, which is all part of the plan as was outlined by Darling earlier in the year. In terms of other news worth noting from the US, former Fed Chairman Greenspan says US may avoid surge in non-subprime foreclosures, and all housing prices indicators are turning, but it's too early to say housing indicators are a trend. Elsewhere from the ECB, Stark said ECB will unwind measures as soon as conditions permit. And taking a look in terms of geopolitical news, worth noting that South and North Korean warships exchanged fire off the western coast after a North vessel crossed a disputed sea border and ignored several warning shots, according to the Chiefs of Staff in those specific regions. Allied to that as well, although oil had been trading lower, it is back to around unchanged into this US Open. We've also have seen some comments in an article by The Guardian who said that key oil figures were distorted by the US, according to a whistleblower. The world is much closer to running out of oil than official estimates admit, according to a whistleblower at the International Energy Agency, the IEA, who claims it's been deliberately underplaying a looming shortage for fear of triggering manic buying. Worth noting that ahead of the NYMEX pit open later. In terms of data that we have seen already today, we need to see equities initially get hits, as well as the euro briefly, on the back of the German ZEW survey, which most notably put a decent strong bid into Bund futures, which were further accelerated momentum with some stops triggered on the upside. German ZEW economic sentiment headline was at 51.1, below the expected 55, with some relatively downbeat comments as well coming from the ZEW economists. Elsewhere, in terms of equity news, we've seen two conflicting stories in the UK banking sector. One from HSBC, who've shot higher and have led the FTSE into positive, if not minor territory. They were up around 4% individually after they had their numbers today. In particular, they said that their US finance unit, that home mortgage unit in the United States, their impairments there are looking to be lower now and have somewhat stabilised, with a benefit to their stock, having seen that US department or unit weighing on the stock for several quarters now. Looks like that could well be plateauing. Elsewhere, Barclays, they were more negative though, and they have underperformed after their 9-month net came in at 2.73 billion against the previous 3.825. Elsewhere as well, we've seen Lloyds Banking Group on the wires today. They've confirmed to their union that they'll consider 5,000 job cuts that they've announced just around an hour ago. In terms of US data for today, it is pretty quiet again. We'll just have the weekly ICSC chain store numbers and Redbook at 12:45 and 1:55 respectively London time. The main figure out of the US will be IDB tips as at 3 o'clock London, so 9 in Chicago. They will have the weekly API all inventory numbers after market today. In terms of speakers, a couple to look out for: Feds Lockhart, Yellen, Rosengren and Torello are all due during the afternoon session. And from the US, following the rather stellar 3-year note we had yesterday, we'll look now to the 25 billion 10-year note auction. Usual time at 6 o'clock in London, so midday in Chicago.